It's game day, baby. Happy Saturday. The Vols are headed to Missouri to get that dub. And then we're going to, after that, we're going to watch Ole Miss beat Georgia. And then we're going to beat Georgia, and we're going to be SEC East championships. Mark it down. I said it today. So, I'm actually on my way out here to Kingston to show a house this morning. And I want to get into a video about mobile and manufactured homes, which is basically the same thing. A lot of people get these confused with a modular home. A modular home is different than mobile manufactured. If somebody says the word manufactured or somebody says the word mobile, they are basically one and the same. Really, they're one and the same, right? They're double wide, single wides, all that. A modular home is really more of a stick-built home. A lot of times it just gets shipped out in like things. They don't just build it using wood and framing, right? It's kind of like already pre-made, and it gets shipped to the site, and they just like put it together like Legos. Something like that. So this video just talking about mobile manufactured homes. I do a lot of these. I grew up living in mobile manufactured homes. A lot of you all did as well. A lot of you guys are currently living in them or currently considering maybe purchasing a new one and putting it on land or something like that. So I want to get in here because there's a lot of myths out there on these things, and then there's a lot of people that just don't understand how the financing actually works on these. So I want to take this video and just kind of go over. I don't have any notes on this one, so I'm going to do the best I can to kind of remember everything. So let's start with really the most important thing, in my opinion, as if it's on permanent foundation. So, permanent foundation with a mobile manufactured home has nothing to do with the block on the outside. Repeat, if it's block on the outside of the home, you see it, does not mean it is permanent foundation, does not mean it is not permanent foundation, right? So permanent foundation is determined by a structural engineer. Usually they're going to cost you about $500 to $600. It has to get done. If you're going to buy it, it has to get done. If you're going to sell it, it has to get done in order to get traditional financing. So in order to get a traditional 30-year mortgage on it, it has to be on permanent foundation. Now, there are ways to finance mobile homes that are not on permanent foundation. There are ways to do it, but this is what I would tell you. Usually the loan terms don't make any sense to accept those loan terms, right? Usually it's shorter years, shorter terms, and higher interest rate, which means your payment is absolutely through the roof. Like I'm gonna give you a quick example. Like if today's interest rates are 7.5, you might be looking at 10 to 12% on a mobile home there with untraditional financing, such as like a Vanderbilt mortgage that's basically through Clayton Homes. So it just doesn't make sense, right? I tell everybody, make sure, I don't consider any mobile homes unless it's really on permanent foundation. So a structural engineer has to come out, has to meet HUD guidelines. So what that means, a couple things. The actual trailer underneath it, the wheels and the axle has to be removed. If that's there, it's not permanent. So those have to be removed. If those are removed, then it's obviously got to be on piers, but now this is where it gets into above my pay grade. It's all about anchor points and tie downs and straps. And just to make it quick and easy for you, it's probably, you got to have so many of these per foot underneath that house in order for it to meet the HUD, which is basically the government requirements there. And the only way to do that is a structural engineer has to come out. I don't care what your papaw said that it's on permanent foundation. His opinion doesn't come into play here, right? Has to get done by a licensed structural engineer, signed off on it. Basically, that means HUD guidelines. We have a great guy. He's usually out there in a couple of days for any of these situations. So sellers, if you're going to sell with me, we're going to do that beforehand. I view that as a seller cost. You really need to do that to sell it. And then if you're buyers, we're going to try to get the seller to do that before we, get through inspection and all that, because if it's not, odds are you can't finance it, or it doesn't make any sense to finance. So all that can be worked into a deal to an order. And I'll say most double wides are going to be on permanent foundation, most of them. But single wides, for one, not a lot of lenders even will finance single wides. We do have some that will. But a lot of the single wides are not on permanent foundation. A lot of times they still got that axle tongue and the wheels and stuff like that. But if it's been removed and it is on permanent, I've done single wides that were. It's the same thing. Traditional financing applies. No big deal. You can get it done. So let's get into, is it a good investment, right? I hear all the time, oh my gosh, you buy a mobile home, it's like buying a car. The value goes down. That's a lie. It does not go down. The value goes up. As long as it has been put on permanent foundation. At that point, with the purchase of the real estate, a title company will actually, because mobile home comes with a title like a car. But when you purchase it and you put it on permanent foundation, the title company will do what's called detitling it through the state. So they will then send the title to the state, they will detitle it, and now that manufactured home is now a part of the address. It is real estate, right? So that's the big thing. If you got a title in hand, it's not considered real estate. So this is, I've actually seen this happen before. Somebody they had a manufactured home on a piece of property that wasn't theirs. They needed to sell it, for whatever reason, wanted a real estate agent to sell it. Well, a real estate agent cannot sell a manufactured home that does not come with property. It is not considered real estate. Like literally, if I put it up on the MLS, I could get fined for that, because it's actually, I'm not selling real estate. I'm basically selling a car, right? Because somebody has to buy it and move it, right? It's not actual property. So whenever you buy it, title company will detitle it. It's considered fixed the property. It's real estate at that point. Double wides are going to go up in value. Now, financing terms and single wides are going to go up in value. Now, are they going up at the same market value as a stick-built home? No, right? If you comp mobile homes, you have to comp mobile homes to mobile homes. So this is kind of where we've seen this happen. We actually had a seller that did a custom mobile home, and they did every upgrade known to man. I mean, it was like a Taj Mahal of mobile homes. I've never seen a mobile home this nice. And in the listing appointment, it was actually one of my agents that was working with the seller, but I went to the listing appointment with them, and I mean, I just told him, I was like, hey, the fortunate part is you have a nice, awesome home here, but there's not going to be comps to justify the price that you probably could get for this. And sure enough, they wanted to list for much higher than what we could comp it at, and it never sold, never did anything. And then finally, we got the price down to where the comps would allow it to be purchased at, and it still actually appraised for a little bit less. But it is what it is. I had to agree to sell it because of comp. So that's the thing of mobile homes, is whenever you go to upgrade something, keep it medium to low grade finishings, in my opinion, because you never want to be the nicest house on the block. And for mobile homes, the nicest mobile home, because you can outprice comps. Mobile homes have to be comped with other mobile homes. So a 1,600 square foot double wide is not going to sell for the same price as a 1,600 square foot one level rancher. It's just not going to do it. Because again, one's a stick built, one's a mobile home, they're priced differently, but they are going to go up in value. We bought a double wide near downtown Knoxville. It's like 2 miles north of Neyland Stadium. We bought it, I think it was either March or April of 2021, so we've almost had it 2 years, as an investment property, right? It's a 4-bedroom, 2-bath. I'm wanting to say we bought it for like $155. Then it was a nice home. There, we haven't had to put much money into it repair-wise. We had a slew of renters trying to rent it out. We had to, basically pick of the litter as far as renters go. They've been in there the whole time, and I could sell it tomorrow for $200,000. I know that for sure. So that would be a significant. It's went up in value that much. So don't be afraid of like buying a manufactured home and it like decreasing in value, because that's what your fourth cousin told you, when they were an agent 7 years ago, how the market was. It's not true. They do go up in value. It is real estate. Real estate all goes in value, because really what happens is the stick-built homes go up in value so much that the manufacturers are still hanging out, and I think they're a good deal. I really do. You probably don't have a whole lot of agents going to have the same opinion as I do. I'm probably in the minority with my opinion on that, but I think dollar for dollar, they're some of the best deals you can get in real estate as far as your size. Nice is a lot of times, inspections are pretty clean on manufactured homes. But, just like a regular home, right? How old's the roof? How old's the HVAC? How old's the water heater, right? All that good stuff. But traditionally, right, they're not 30 feet away from the neighbor. You can find these manufactured homes, usually on an acre, 2 or 3 acres, especially out in the country, with some good privacy. And I tell you all the time, I think they're a good deal. If you tried buying the same house, the same quality, the same everything in a stick-built home, you're probably paying $50,000 to $100,000 more for the square footage and the quality that you're getting. So it makes sense for some people to do that. Loan types it can go. Manufactured homes, again, as long as on permanent foundation, they can go conventional, they can go FHA, they can go VA, they can go USDA. Traditionally, right, if you're not a veteran, the best loan terms is going to be FHA. FHA usually on manufactured homes, and this is kind of just a good rule of thumb. Any loan is usually going to be about a half a point to a point higher interest rate on manufactured homes. It's something to consider. It is what it is. That's just how the system works. But FHA usually has the best loan terms for manufactured homes when you compare it against conventional or USDA. Even though USDA is 100% financing, USDA is not great for manufactured homes if you can go FHA. It's just better loan terms on manufactured. That being said, insurance is also a little bit higher, and I would say probably anywhere from 25% to maybe 50% higher, in a given year than what it is on a stick bill. And the reason is, I don't know the exact reason, but I'm gonna give you my opinion is they're really a fire hazard. If a fire does start, odds are a manufactured home is going to be a complete loss versus a stick bill, that might burn slower. A manufactured home is going to go up quick. So insurance and stuff like that is always a little bit higher. So that's something you got to consider on your debt to income. If your max budget is $200,000 and then the double wide's $200,000, you really need to have a conversation with your lender before putting in an offer, because you got to think your interest rate's actually going to bump higher. So that's probably less approval, and your insurance is also going to be higher. So it might be your max budget's $190 on a manufactured home instead of the traditional $200 there. But those are conversations for your lenders. But yeah, I think one of the biggest things that irritates me, and a lot of times, especially if it's somebody I don't really know, they just hate on manufactured homes and they go down in value. That's not true at all. Not true at all. I had at one point some investors working with, they would go out and buy these manufactured homes for $130,000, $150,000 all in. Find a $10,000, $30,000 piece of land, throw it on there, sell for $225,000, $250,000 all day long, and do it. Now, manufactured home prices skyrocketed so much that they really can't do that. Because I tell them the golden rule for manufactured homes is you really want to keep that price point under $250,000. So if it's under $250,000, I can't ever say right now, especially on this market, right? I can't ever say the word easy to move. That's not right anymore. But under $250,000 traditionally, right? It's pretty easy to sell, right? Because that buyer, is considering that. But once you get above $250,000 and especially above $300,000, it is very, very difficult to move the nice manufactured homes. And that's just because the buyer, right? The buyer that's approved for $300,000 in their head, a lot of times, unless they just grew up in a rural area, from the rural area, understand it, in their back of their head, they want nothing to do with a manufactured home. Their mom and dad and grandma and grandpa told them manufactured homes decrease in value, so they dang sure don't want to go out and spend $300,000 and think they're going to lose their money. So the price point wise is keep it under $250,000 there, and you should be fine in order to sell. But it gets very, very difficult to sell mobile homes, manufactured homes, if you're above the $250,000, $300,000, even if it's on permanent foundation and all that stuff. I've seen it firsthand where it's just too nice of a home, and they don't get their money back, or you know, maybe when they went in and remodeled it, right, they just went too high end and there. So think manufactured homes, you know, medium to lower grade finishings there. Everything still functions good. You still, you know, get all that, but you don't really want to go into a manufactured home and putting in tile showers and, you know, granite quartz countertops and all that stuff. You really just kind of, you don't want to do it. You don't get that great return. So, but if you ever have questions on these, you know, manufactured mobile homes, any of that, you know, I can't say I know every single thing a lot, but I've done, you know, I don't know, you know, 40 or 50 transactions with mobile manufactured homes. So I've seen a lot of it, done a lot of it. Now, one thing I'm going to end with here, any home that is mobile manufactured, that's, I'm pretty sure it's before 1978, 1977, something like that, it is impossible to basically finance it. Now, you might have a small bank that's willing to do a portfolio loan there, but there is no financing on mobile manufactured homes that is basically done. I got one more thing after this too, it's popped in my head. Before I think it's 1978, 1977, something like that. There, and it's something with the way they were built back before then and the way they're built now. I've seen this case, and getting into my next point here, actually I had a call from a lady, had a awesome single wide, completely redone, super high end, nice finishings, but my next point here, it actually had permanent additions on it. So I had permanent additions added on, or site built additions onto the single wide, and as well as very, very nicely done. And they needed to sell it. They had bought it cash. The real estate agent didn't tell them, how the financing stuff works. And sure enough, like, I called around, made a lot of phone calls. They can't sell it. If it was a single wide or a double wide with permanent additions on it, you have to find comps, which is, again, little to impossible, that are other manufactured mobile homes with permanent additions onto it, to then comp that additions to get that square footage value. It's very difficult. Very, very difficult. But the hard part for them was it was built in like 1972 or something like that. They had just redone everything, and so they just couldn't sell it, right? Lenders won't loan on it. So there's all kinds of stuff you need to consider there when buying a mobile manufactured home, so you don't end up in a situation, where it's not on permanent foundation if you're a cash buyer, because that's not required if you're cash, or something like that. All the goodies there. So, but questions, guys, always feel free to holler. Hope y'all have a great day. Go Vols, beat Missouri.